Hey guys, this is Alex from MarketWise Asia in collaboration with NASDAQ, and we are creating a 4-part video series on options, and the objective is to help you understand options, especially if you are a complete newbie. And on the NASDAQ website over here, right, there are some great articles you can read to learn more about options. Okay, so what are options, understanding options, benefits of trading options, can click to expand and read the content over here. Okay, so you can head over to the link over here, or you can scan the QR code. And in today's video, I'll be covering stock trading versus options trading. So what's so great about options, and what are the main advantages of using options? And of course, nothing is perfect. I will also share the main disadvantage as well in my personal opinion. Okay, so I think for stock trading, right, all of you should be very familiar. If you are bullish, you just buy or long the stock. And if you are bearish, you can just sell short. Okay, you can short the stock. And there are a few reasons, why investors or traders use options in their portfolio. All right. So mainly, hedging, the flexibility, the leverage, the limited loss, and income generation. So let's go through one by one. Okay. So number one, hedging, right? I mean by protecting your portfolio. So let's say you are worried that the market is going to plunge next week or next month and take a bite out of your profits, right? You can hedge your entire portfolio by buying options on ETF that follows major indices, such as the S&P 500, the Dow Jones, or the NASDAQ 100. And as the market goes down, right, your options gain value. And the professionals, right, routinely use options to hedge their stock portfolios, and you can do that as well by using options. Okay, so number two, right, flexibility. You can make money in any market direction or in any market environment. Okay, you can create option strategies that attempt to profit from bull, bear, or sideways market. Okay, some of the strategies can be very simple and direct, while others can be a little bit more complicated. All right, number three, leverage. Leverage means you may be able to use less money to gain exposure to the movement of a stock price. In other words, right, with options, right, you gain market exposure that's similar to owning a stock, but you generally commit less money to make that happen, and that could mean more flexibility for you and your portfolio. All right, number four, right, buying options can have limited loss, right? The single best reason for choosing options is that you know in advance how much you can lose. You are in control of how much risk you are willing to take. So if you like to short stocks, right, it's actually much safer to use option strategies than to short the stock directly. And number one, two, three, four, number five, right? Okay. Some investor trade options is to produce income, much like a dividend on stock. Options can be used to generate an income stream. There are option strategies that let you collect money on your existing or future stock position. Okay. So actually, in my personal opinion, right, the biggest advantage is the leverage and the limited loss. The leverage and the limited loss. Okay, I will cover that more. All right, so imagine, all right, buying a stock, right, and the stock price is $100, and you buy 100 shares. So $100 times 100 shares is equal to $10,000, right? So you have $10,000 worth of stocks, and you have to pay the full $10,000. But right, if you use option, right, instead there is leverage, and you may be just forking out about $2,000, right? It could be plus minus, could be 1,500, could be 2,500, 3,000, but average about 20% thereabout, right? So to have the same exposure of $10,000 worth of stock. So that's the leverage, right? You are using $2,000, right, to control $10,000 worth of shares. You can use the rest of your capital in other investment. Okay, and another advantage, right, is limited loss if you are buying options. Okay, so let's say if you buy a stock directly, right, back to the same example where you have an exposure of $10,000 worth of stocks. So you set a stop loss of 20%, meaning that if the stock price dropped 20%, you exit your position. By right, you still have $8,000 after exiting. But sometimes, right, due to earnings or some fundamental reasons, right, price could get down suddenly. So let's say you enter at $100 at the share price, right? But next day, when the market opens, it gets down to $50, right? You are facing a loss of $5,000, right? In the worst case scenario, right, the company could just collapse due to fraud and you could lose 100% of your capital, okay? All right, but if you use options, right, the premium you pay could be just $2,000, and that is the max loss. You can never, lose more than the premium you pay for the options. That is $2,000. Okay, $2,000. Okay, so same for shorting stock, right? If you short the stock, right, and the price kept going up, your loss could be unlimited. But if you use option instead, right, your loss is only limited to the amount of premium you paid for the options. Of course, all right, no strategy is actually perfect. I think the single biggest, right, con to option trading is actually, time, okay, time decay. And stock options, right, contain a time value that is constantly decaying, meaning, right, you lose its value a little bit day by day, and by the time, right, it expires, right, the options is worthless already. So you have to get the time element right. And a stock buyer, right, if you buy the stock directly, right, a stock buyer has an indefinite amount of time to be right. You can hold for 5 years, 10 years, 20 years, no issue. Okay, right? But as an option trader, right, in contrast, right, you must be, before the expiration deadline, right, you must be right, in order to profit. So there you go. I hope this video help you to understand the advantages of using options instead of just buying and selling the stocks directly. Okay, so I will see you guys again in the next video. Okay, see you guys. Thank you. Bye bye.